Thanks so much for tuning in to today's talking point or Q3 with BQ as the case may be. And we joined on the earnings call by Vivek Vikram Singh of Sona Comstar. Of course, they posted what I thought was a rather impressive quarter: growth on top line, growth on the operational metrics and the EBITDA margin front, aided by a better product mix. Order book has swelled as well. If anything, the pickle that you would expect from a any company of that nature of work is that while Americas did well, the rest of the world did not. But you would expect, or you would argue that that is anticipated. The questions, therefore, to him would be that how would 2023 as a year shape up, if it is even possible to predict that? Great having you, Vivek. Thanks so much for joining in. What's your sense around? Okay. First, did the quarter shape up as you had envisaged on the reported metrics?
So slightly less than what we envisaged, but that's the nature of the beast that we are. We always expect a lot from ourselves. So I think we are always in a good place where numbers are good. I mean, they've grown by, I think, 30 to 40% across all metrics. I think 45% on net profit. But yeah, we had wanted more. We always want more.
Yeah. Okay. Fine. So, what would have led to this number not meeting your expectations? Is it the performance from the rest of the world, and would that continue to remain uncertain in a scenario as we are looking at today?
Yeah, look, I mean, if you'd asked me this question on what Q3 FY23 would look like 3 quarters back, we did not expect there to be so much weakness in Europe, which it was. Second, because of the new battery standards that the government just had, the new regulations. So EV two-wheelers all had to get homologated once again. So there was no production in October, November. So we got zero revenue from that. So if all those things had not happened, obviously the numbers would have been higher. But these are things we can't control. And I think in your opening remarks, you mentioned 2023. And things are uncertain, but things are always uncertain. I mean, I think certainty is merely an intellectual wise. I don't think there is any certainty apart from when you look back at things, then things are certain and they always seem very obvious in hindsight, right? I think what is confidence? Confidence is the ability to move with forward momentum despite uncertainty on the back of your own steam, the steam of your efforts and your abilities. That's the confidence we have. Things are always going to be uncertain. So I'm not that worried about macroeconomic. Yeah, we will always perhaps be a little shorter than what we hope, but for external perspective, it will still be fairly impressive. I mean, we've grown at 34-35% CAGR for the last 7.5, 8 years. We have seen COVID, we have seen revenue go to zero, we've seen a war, which we didn't think we'll have in our lifetimes. We've seen a lot of macroeconomic uncertainties. But that's okay. That's the nature of the world.
Yeah, and you're extending your strides on the EV side per se. If I'm not wrong, over 70% of the order book, if I'm not wrong, is currently EV. You won a very large order in that pocket as well. Talk to us a bit about that, and how does that shape up in calendar year 23 or FY24 as the case may be?
So EV as a proportion will continue to increase. I think we've taken a target of 45% in FY26 as a part of our sustainability goal. So we published our first sustainability report also. So 25% is our revenue, 45% of revenue. Order book 73% is from EV, you're correct, but that's for the next 10 years. So this 45 will keep increasing. EV will become a major part of the powertrain regardless of what vehicle you're looking at. So starting from EV, two-wheeler, three-wheeler, bus, commercial vehicle, truck. I think a lot of us, when we think of EV, we still think only passenger car. There are a lot more vehicles in the world and a lot more applications. So we have put out a new slide which showcases our electrification strategy, which is we want to be wherever there is a higher torque application. for differential and driveline products, because that is where higher value is. So the goal is not that if there are 120 million vehicles made in the world, we should have market share of volume. We should have the top market share of value, which is higher the top, the more the value. So you rightly pointed out, our single largest order win this time was from a EDL. It's an electronically locking differential. Now, why is it highest? Is that vehicle going to sell the most number of volume? No. It is because we get 8 to 10 times a normal car value with that, because that product is just far more evolved. So, like I told you last time, this is our strategy. We keep making our product better and keep becoming from component to module to system. As you add more value, your dependence on selling more goes down. Hence, you can preserve margin and get better return. We would rather sell 100 of really high quality, high value things than 1,000 of commoditized, low margin, low price things. And that's the play. That's the play.
Got it. So actually, I wanted to ask this to you about EDL, and it's happening with different companies in different facets, wherein they are doing not from a perspective of a showcase, but a showcase deal or a landmark deal, which is amazing for them. It's a new thing for them, and it helps them showcase that to a bunch of other clients to mine all of those for the same kind of work as well, and therefore enhances margins, visibility, what have you. Talk to us a bit about EDL, because clearly every note is talking about that as well. And how does that help you in the course?
So this is the first time, to the best of our knowledge, that an electronically locking differential will be used in an electric vehicle. So it's a sort of a pioneering product in that sense. We will, of course, use that playbook and go to other people and showcase it. It takes time in auto. Now, we've been working on this for 2 years with the customer that we have got the order from. So it takes time. It is by design a long-term business that you play with other long-term players. Short-termism is not a thing. So it will take time, but as you know, we started differential assembly with one customer in 2016. In 2023, we have 12 or 13 customers for the same product. So it explodes over time. In 2019, we did our first traction motor, right? Today, we have more than 12, 13 electric traction motor customers. We sold 120,000 traction motors last calendar year. And you obviously know the numbers. There were only 620 or 630,000 electric two-wheelers sold in the country. So to go from zero to perhaps, we don't know because we don't have an independent research study, but I would assume 19-20% should be one of the largest, if not the largest. That's the ability. It takes time, but it takes 2-3 years for the efforts to go to another. What we are very conscious of is not declaring a product before we have a committed purchase order. So first we sell it, then we tell people. So yeah, if you didn't visit us at Auto Expo, but if you had, there are a lot of things we have at any given time in R&D. There are a lot of things that are under conversation with or in development or joint development with customers, but we don't talk about them because now we are public. And when you're public, you have to be very careful about if people can take it as an over-promising thing. So now only if you get a purchase order do we say, okay, we've got this product.
Which is fair practice also, but I'm just wondering that while it may have taken you 2 years for EDL, just again, I request to, even if you've spoken in the past, just spend a minute and tell us about what this does per se. And two, would you believe that you would hope to bag other clients with this product at a slightly quicker pace?
So second part is the easier one to answer. Yes, of course. We are in conversation also with people. Obviously, we would want to, but it takes time because you have to validate the whole vehicle. And the entire vehicle design has to go to a change because this is a way to do the whole powertrain. Second, for some, it's a make versus buy because they make it. And then there are several other complications, including, if they unionized plant or not. So there are many things at play. EDL is an electronically locking differential, unlike a manually locking differential. Here, this is used in off-roaders and high-end SUVs, where if one wheel gets locked, how do you transfer all the power to the other one? Or you can lock both at the same time. And it is done by an actuator, which the computer on board the vehicle, when it senses something, it tells it to do that. That's the way it functions. So any and when I say SUV, I mean SUV as the definition, which is globally acceptable and not crossovers, city vehicles. Any off-roading vehicle of which is four-wheel drive has to have something to help it do this. So yeah, EDLs are used in ICE vehicles even today, most of them. Uh, so far, electric pickup trucks or electric SUVs were not using them. I think this would be the first of its kind.
Okay, well, we wish you all the best for that. Now, the other part about not just quarter four or maybe even quarter three, but what could happen in 2023 would be the relative base effect of the input costs that might have impacted the auto and auto anks industry at a large and is now receding. What's your sense on how much of an alpha does it bring for you, purely net to net basis?
So, okay, alloy steel is our biggest purchase commodity. Second, I would say, would be unalloyed steel. Third would be copper. Fourth will be aluminium. I think aluminium and copper have come down, while copper's again started going up on China reopening, etc. Steel unalloyed has come down decently. So we have seen some of that advantage. However, alloyed steel, which is our biggest quantity, has not come down in the last 6 months. Because there is nickel, there is moly, there is chromium, there are a lot of other elements in alloyed steel. I think there is room for it to go down. Obviously, our supplier friends in alloy steel mills would not like to believe that. But I think there is sufficient room for it to go down. If they look, there can be one of two things, right? Either there is a slowdown or there is not. If there is a slowdown, commodity prices will drop and margins will expand. If there is no slowdown, we will have far more growth and hence operating leverage will make up for it. Which is why in our earnings call last time, someone said next 4-5 quarters, do you think margins are sustainable? I said, yeah, because I know both cases what happened, and we've seen both sides of this story. So 27% EBITDA, 15% PAT seems to be for the near term sustainable if the geographic and product mix continues, which looks likely.
Okay. Last couple of questions. One is on how do you anticipate from your vantage point what the near-term global demand could look like in wake of the fact that China has opened up, but it's a bit of a black box, at least for us out here, and Europe were okay for you as
China is
well.
a black box pretty much needed for everybody, I think.
Okay, fair call. But having said that, since you run a business and I don't, I'm still asking you. And since I'm a journalist, I'm asking you, China opening up versus Europe, almost looking certain to be in a recessionary phase, and US a bit of a mixed bag out there. And even in Europe, by the way, I hear the forging companies say, for example, that the replacement demand is going to be very strong because there is no choice that those guys have out there. So I'm a bit confused. I would love for you to simplify it.
I don't know who it was who said that if someone's salary depends on answering a particular way, that is what the answer they give. So I would not read too much into what people say who are heavily dependent on anything. But Europe uh, has been in a recession for a while, I think. I don't know why it's not reported as such. It's not like there is a looming recession. It is in a recession. The last 5 quarters, and I look at only light vehicle sales, that's the thing that matters to us. Light vehicle sales have been negative for the last 5 quarters, apart from last quarter, which was an uptick. first uptick after 5, which is I would say to us, it's a sign of that there is a bottom. I don't know if it is going to turn around, bounce back, and all that, but I think the bottom's established because there is a minimum demand for automotive that always happens. Even when COVID happened, there was a minimum level of purchase that happens because there are transit vehicles, there are commercial vehicles. You can't, even if you live at home, right? If you get things delivered, someone got it to you. That person was on a vehicle. They were not on horseback or on foot, right? Things are being delivered, things are being transported, people are moving from point A to point B. Europe's had its one of its worst 3 years in the last 20 years, I would say, already. So the bottom's fairly established. I think there is only one way to go, which is up. How much up, I can't predict. US is also not doing very well. If you go to 2018 automotive sale numbers and you compare that to where it is, it's actually very low. I think the US market, even in 2022 calendar, fell over 2021. So things are not as if so a large part of the economy in US and Europe may have been doing well in 21 and then they saw recession. But automotive has been in trouble since 2019 beginning. There was the supply issue, then there was COVID, then there are many, many issues right now. I still feel that automotive will be one of the lesser impacted ones by the slowdown because the supply demand gap was quite high for the positive. That first, that gap has to go to zero. After that, it has to recede for it to actually start becoming a slowdown. So I think right now I don't see much dark cloud there. Second, there is always a very fast growing market that we also have called India, which has, by the way, now become 6% of the world market, which is quite a remarkable thing. We are the third largest market in the world now. China, US, and now India.
Yeah, most certainly. Actually, I was going to wrap up the interview with that even in Davos, it was all about India. You don't have too many customers in India or for the kind of innovative products that companies like yours might be coming out as well. So does this whole fanfare around India not rub off as positively on you as as otherwise you would be keen for? Because India is not such a large market for you, maybe?
So India's not, India's second largest market, 29% of our revenue comes from there. But for India, we are fairly significant in the sense that we have 68 to 70% of the Indian market share in passenger vehicles, about 90% in commercial vehicles, and about 80% in tractors. So
I meant for new products. Sorry, I meant for new products is what I'm trying to say.
I mean,
the last question. Yeah.
India is Indian auto market slightly behind in the adoption curve. So what we produce for the world today, maybe 4 or 5 years later, we will be able to do that in India as well. There are sometimes that there are some innovative customers who want, at least for the higher end models, some higher end things, and that also. So let's say India electric vehicle story, even on the PV side, I think we are in most Indian cars. And on the Indian two-wheeler side, we are in most of the motors. So if India does well, we do well by default.
Okay,
and I hope that India keeps growing and the market keeps growing.
Cross finger. Such a pleasure talking to you. Thank you so much. Congratulations on arguably a good quarter and all the best for the quarters ahead.
No, thank you, Neil. Thank you.
The pleasure was ours. Viewers, thanks for tuning in.